studio with me today is Mr. Tilewa Adebajo. He is CEO of CFG Advisory. He's also an economic policy analyst. Thank you very much for joining me in the studio.
Thank you very much.
All right, so in terms of the 2019 budget, how well do you think this reflects our current economic situation in the country?
Well, unfortunately, the 2019 budget has gone off to a false start. The base and the benchmark price which they have used for the oil price is actually no longer relevant. And what that means is that the budget is already starting with a higher deficit financing capacity. So I think we might have to go back to the drawing board on that to be able to see what we could do in terms of looking at the realities on ground, as you say. So there's a bit of realignment that needs to be done when it comes to the budget, quite clearly.
In terms of the Apex Bank trying to stabilize the currency, do you think the focus should be on stabilizing the currency or trying to preserve our reserve buffers?
Well, it's what I would say, it's a catch-22 situation in terms of how you are managing. If you have a strong economy and you have confidence, then that will not concern you that much. But the issues we have that is plaguing the central bank right now is the multiple exchange rate systems. If you need to be able to find a situation where you have a market-driven system, and you should remove what I would call the arbitrage opportunities that is officially or artificially induced arbitrage into the market by offering multiple exchange rates. I think if you get some convergence on the rates, there's no reason why the Naira should be not be trading at 250 Naira to the dollar. So that's my own, I think, fair value price of where the Naira and the dollar should be trading currently, irrespective of the level of reserves. Reserves will come and go down, and I think that's clear based upon oil price fluctuations. But the question is the fact that we have to understand that we also have remittances of close to $25 billion every year to be able to support whatever FX inflows that we get into this country. If you have that single window, you see significant convergence in rates.
Do you see in Nigeria where in 2-3 years where our Naira to the dollar is trading at 200 and something Naira to a dollar?
It can happen in the next 2 weeks if the right policies are put in place. You don't need to wait that long.
Nigeria has got some really large deficits, right? But do you think the country also has structural plans to, reduce this deficit?
Well, deficit has to do with what exactly are we financing, what are we budgeting that is resulting in a deficit. If a deficit is to fund, we're financing our deficit to fund recurring expenditure, then we're in trouble. But if the deficit is as a result of our capital budget where we're looking at investments, then we have significant upsides to that. Having said that, I think the government is currently going through a fiscal crisis which they need to address and try to restructure their balance sheet on the fiscal side. It's a cause of concern for everybody, and that ability or inability to have an effective fiscal policy is weighing negatively on the monetary policy.
We'll still go to the discussions on fiscal and monetary policy, but then do you think that the country's consistent expenditure at some point would start to affect the generalization of the economy as well? Because we see a situation where our reserves, they are running lower than what we generate in revenue.
Like I said, I'm not too focused on reserves. I'm focused on economic growth, the right economic conditions. If you have proper economic policies in place, if you have the right exchange rate mechanisms, the issues of reserves and all that will sort itself out. Having said that, I think going forward, what is important is for us to be able to drive growth in the economy. Our economy is only growing at less than maybe 1.8%. While our population is growing at 3%. And that's why Nigeria is now the poverty capital of the world. These are the issues we need to address. What kind of stimulus, the expenditure that you talked about, do we need to put into the economy to be able to achieve the desired rate of growth that can drive our economy forward. And I think that those are the issues we need to look at.
We saw quite a lot of foreign portfolio investment sell-offs last year, and then a lot of foreign capital flight, right? Do you think this has something to do with the current policies that the government is running?
Well, policies on one thing, but most important thing is elections. The institutional investors have read our cycles, and traditionally they leave at this time of the year, and when things are settled in terms of elections and they know what direction and what the policies of the next government will be that is favorable to their interests, then of course they'll come back in droves. But right now I think we have to discount the political factor, and that's really what is driving the capital flight. But we need those policies that will give us sustainable growth and those stimulus that can provide sustainable growth. So those policies or those intervention programs for the social intervention eventually can translate into maybe a social security program once the economy is up and running properly. These are the sort of things you have to look at.
But while this is commendable, how sustainable do you think the approach to all poverty alleviation is?
Poverty alleviation is as a result of growth of the economy. The numbers are very simple. If you're growing your economy at 1.8% per annum for 3 years, and maybe at a point in time it was negative in recession, and your population has been growing by 3% for the next
There can be a negative
3 years.
in terms of population.
So what you're seeing is the fact that your population has grown 3%, 3%, 3% over 3 years, and then your economy has gone -2, -1, 1.5, 1.8 in the last 3 years. So basically, the solution to that is that if you have to be growing your economy at least by 6.57% per annum. If you're doing that consistently, then you would reduce the number of people that are in poverty. So it's a very, very strong correlation, and it's just that simple. So if you can provide a stimulus for growth, then and it's not just growth, but quality growth that creates employment, then you should be able to address the issue of your population growth and to be able to provide from that. So it's fundamentals and the basics of economics that you just really need to address.
Some analysts believe that when you talk about the monetary policies and then fiscal policy, they do not really intertwine. What's your thoughts on this?
Yeah, well, currently the monetary policy and the fiscal policy is not in alignment. And the reason why the central bank has stayed put on those rates and not moving is to be able to create the stability and the buffer to affect the fiscal crisis that we're currently undergoing. So that's where we have that challenge right now. Because what the central bank should be doing when the economy is not growing or recession is to be able to cut interest rates, to be able to stimulate growth and investments, but they're not doing that. So because of the fiscal challenges and the financing, the deficit of the government itself. So that's that imbalance that we need to redress.
And what exactly are the risks involved in a situation like this if it is not resolved?
Well, the risk involved is the fact that by piling up more debt, you're paying more in terms of your interest repayments. It might be good for the investors who are putting money into treasury bills at 19%, but in terms of creating value, creating growth, creating opportunities, it's very difficult. It's also a disincentive to the banks to lend, because it's easier for the banks to take the deposits and also invest in treasury bills by lending to the government and crowding out private sector credit to the detriment of the economy. So you have a situation whereby your debt profile has increased and the amount of revenues that you're using to service your debt is now up to 60%. So by the time you're using 60% of your revenues to service your debt, that is not sustainable in the long term. So those are those issues that we also need to redress in terms of financing the deficits and the debt profile, and of course the fiscal imbalance that we're experiencing at the moment. So we need to redress that very urgently and put in the right policies to put in the corrective mechanisms to return what I'll say to some level of stability or equilibrium.
All right, and then let's talk a bit about the government and then its collaboration with the private sector. How essential is this in terms of, economic growth? And then we're talking about industrialization, and things around it?
Okay, a government that's in fiscal, facing fiscal challenges clearly does not have the finances to be able to put in the projects. So what the government needs to do, I think, is to take a look at their privatization program through the Bureau of Public Enterprise. They need to regenerate interest in there, and also their concessioning program through the ICRC, the Infrastructure Regulatory Commission, to see how we can attract in a very open and transparent way private capital to be able to get into concessionings and privatization of some of these government assets, and to be able to bring in money to be able to help what the government has, or to add to what the government has, to be able to increase the level of development. So I think that's another area whereby you need to bring in capital. There's a lot of private portfolio investment that goes into the stock market, but you'll appreciate that that kind of funding, it's very temporary in nature, and depending on the market conditions, that kind of money tends to go away.
Makes them run away.
So we're looking at the foreign direct investments that is here to stay over a longer period, and that type of money tends to go into concessioning or into privatization, especially in the infrastructure space.
Then sometimes some private sector individuals complain that the ease of doing business is quite daunting in the country. What's your thoughts on this?
Well, like it's if you talk to any entrepreneur, not even anybody, not to talk about foreign investors, talk to Nigerian entrepreneurs to see what sort of challenges they have and how you need to overcome. Excuse me. The way the local governments harass you, multiple taxes, while you're just trying to, it's not a very conducive environment to be able to be an entrepreneur. So a lot of all these issues have been addressed. As you know, you can register a company now much easier. And as long as we begin to remove all these barriers, and I think it's something that the government has actually recognized, and they've actually done quite a lot of work. And I think they're beginning to see the benefits of that work. And it's also important that they carry the state governments along to be able to make sure that things are a lot easier in some of these states. And we are seeing a lot of states coming up on the ease of business ranking.
Ease of doing business.
And I think by the time we begin to publish this data and create some sort of competition among all the Nigerian states, people now realize that it's easy to do business in here and that. And commercial city of Lagos, where you have the population and the market, ranks pretty low on the ranking of all the states, where you have states like Kaduna State topping the list, and Ogun State coming like 4th or 5th. So a lot of work needs to be done in that area, and we need to sensitize people, especially at the local government level, that they shouldn't be people who cause disincentive to businesses, but they should be enablers of businesses. So I think if we can get that message across at the local government level and the state government level, we can see significant improvements in that area. But of course, without a doubt, the consciousness and the awareness is there.
It's very important. All right, thank you very much for joining me on the program today. Thank you very much.
You're welcome.